Welcome back to Debit and Credit Online Classroom. Today we are going to discuss about the accounting treatment of goodwill, which is a very important topic from the point of view of examination. Let us see what this goodwill is. Goodwill is the value of reputation of a firm in respect of the profits expected in future over and above the normal profits earned by other similar firms belonging to the same industry. If a firm is able to make more profit than the normal profit earned by other firms in the industry, it is called that firm is having a goodwill. It is an intangible asset. Intangible asset means which we cannot see, but its effect will be there. It is made by the effort of the existing partners in the past. The goodwill so generated is called self-generated goodwill. Usually the goodwill purchased only will be shown in the books of accounts. Self-generated goodwill is not shown in the book of account. Now we can learn the accounting treatment of goodwill. At the time of the reconstitution, the gaining partner should compensate the sacrificing partner by paying a premium for goodwill for a sacrifice they make in favor of gaining partner. When a change in profit sharing ratio occurs, some of the partners will be sacrificing for the other partners their share of or a part of their share of profit. This should be compensated by paying a premium for goodwill, and that should be accounted. So the gaining partners should compensate the sacrificing partners for their sacrifice, and it should be in the sacrificing ratio. Now let us see how we can calculate the amount of compensation payable. Amount of compensation payable is equal to value of firm's goodwill into share of profit gained. That means the sacrificing partners are sacrificing a part, or they are sacrificing a share to the benefit of the gaining partners. So that should be compensated, and we can calculate the compensation amount by multiplying the value of firm's goodwill by share of profit gained. Now let us see the journal entries. The goodwill can be adjusted in two ways. That is, it can be adjusted through the partner's capital accounts or by raising the goodwill account on opening an account for goodwill. In the first case, that is adjusting through partner's capital, we have studied that the gaining partner should compensate the sacrificing partner. So entry will be gaining partner's capital account debtor in gaining ratio to sacrificing partner's capital or current account in sacrificing ratio. That is the adjustment made for the goodwill at the time of change in profit sharing ratio. And in the second case, that is a goodwill account is opened. Normally goodwill should not be brought into books unless it is paid for. unless it is purchased. And whenever it is recorded, it should be written off over a period. So, first we are passing the journal entry for raising the goodwill. That is, goodwill account debtor to partner's capital or current account in old profit sharing ratio. For raising the goodwill account debtor to partner's capital or current account in old profit sharing ratio. And this has to be written off. So, second entry will be for writing it off. That is, partner's capital or current account debtor to goodwill account in new profit sharing ratio. First entry will be for raising the goodwill and second is for writing it off. Now let us do a problem on this for better understanding. A and B shared profits and losses in the ratio of 3:2. With effect from 1st April 2018, they agreed to share profits equally. Goodwill of the firm was valued at 50,000. Past journal entries for accounting of goodwill. When goodwill is adjusted through partners' capital accounts, when goodwill account is opened. So the first case, that is adjusted through partners' capital accounts. And we know that the gaining partners should compensate the sacrificing partners in sacrificing ratio. So first of all, we should know who has gained and who has sacrificed. For that purpose, we should calculate the sacrificing ratio. See the working note. Old share of A is 3/5 and B is 2/5. New share is 1/2, 1/2. Difference, that is old ratio minus new ratio, is equal to 3/5 minus 1/2, that is equal to 6 minus 5/10, that is equal to 1/10. In the case of B, old share is 2/5 and new share is 1/2. Difference is 2/5 minus 1/2 is equal to 4 minus 5/10, that is minus 1/10. So when that minus sign comes, that means that partner is gaining. So here B is gaining, and so B should compensate A. And now we have to find out the compensation amount. Compensation amount is equal to value of the goodwill into the sacrifice, that is 1/10. So value of goodwill is 50,000. 50,000 into 1/10, that is 5,000. Now we can write the journal entry. Journal entry is B's capital account debtor 5,000 to A's capital account 5,000. When the goodwill account is opened, first of all we have to raise the goodwill by debiting the goodwill account and crediting the capital accounts. So the entry will be goodwill account debtor to A's capital account to B's capital account. A's goodwill is 50,000 and A and B are sharing in the ratio 3:2. So to A's capital 30,000, to B's capital 20,000. And this we have to write off. So the entry for writing off is A's capital account debtor, B's capital account debtor to goodwill account. Here we have to use the new profit sharing ratio. So 50,000 is the goodwill and new profit sharing ratio is 1:1. So A's capital account debtor 25,000, B's capital account debtor 25,000 to goodwill account 50,000. Now I think you have understood how to do the problem. Now we can do one more problem. A and B are partners sharing profits and losses, the ratio 3:2. From 1st January 2015, they agreed to share profits and losses equally. For this purpose, the goodwill of the firm is to be valued at rupees 60,000. Pass the necessary adjustment journal entry. Here also we have to find out the sacrificing ratio, and the sacrificing ratio is A has sacrificed 1/10 and B has gained 1/10. So B has to compensate A, and the compensation amount 60,000 is the goodwill and sacrifices 1/10. So 60,000 into 1/10, that is 6,000. Now the entry is B's capital account debtor to A's capital account 6,000. Sometimes there will be goodwill in the books of accounts. Already there will be goodwill in the books of accounts. If there is then goodwill, it should be written off to avoid accounting of goodwill twice, because we will be valuing the goodwill at the time of reconstitution. So this should be, the existing goodwill should be written off, and the entry for writing it off is all partners capital or current account done in the old ratio to goodwill account. We can do one more problem. A, B and C are partners sharing profits and losses in the ratio of 5:3:2. They now decided to share future profits and losses equally. The goodwill of the firm has been valued at rupees 90,000. Goodwill is already appearing in the books at rupees 40,000. Show the necessary journal entries assuming no goodwill will appear in the books of accounts. So there is an existing goodwill. First of all, we have to write it off. So entry will to write off the existing goodwill as partners capital account debtor to goodwill account in old ratio. The entry is A's capital account debtor 20,000, B's capital account debtor 12,000, C's capital account 8,000 to goodwill account 40,000. And after that, we have to find out the sacrificing ratio. Here we have three partners, so who has sacrificed to, and for whom that benefit has come, we have to find. Using the formula old share minus new share, we can find out who has sacrificed and who has gained. And from the table, we can find out, see that A has sacrificed 5/30. B has gained 1/30 and C has gained 4/30. So here B and C has to compensate A, and the compensation we have to find out. A sacrifices 5/30 of 90,000. 90,000 is the goodwill. So 90,000 into 5/30 will get 15,000. And gaining ratio is B is to C, that is equal to 1:4. That is B has gained 1/30 and C 4/30. So gaining ratio is 1:4. So they should compensate in this ratio. 15,000. B has to give 1/5 of 15,000, that is 3,000, and C has to compensate 4/5 of 15,000. Now we can come to the journal entry. Journal entry will be B's capital account debtor 3,000, C's capital account debtor 12,000 to A's capital account 15,000. For the examinations, when you write the answer, the solution should come at the top and the working notes at the bottom. I believe that you have got an idea of accounting treatment of goodwill at the time of reconstitution. And the valuation of goodwill you will be learning when you learn the admission of new partner. Thank you for listening to my class. And if you have not subscribed my channel, please subscribe to it. Thank you very much.